What's going on, everybody? We are back at it again with another segment in this Forex trading course, and now we are moving on to our Forex basics, which is going to be understanding and reading price quotes. Now, at the end of this video, I'm actually going to give you guys the simplest tool when it comes to calculating your pips, and just giving you the easiest, least time-consuming way to understand your pip count and things like that. So stay tuned to the end of this video to get that nugget. All right, so let's get into it. So, little terms and definitions. Now, I'm not actually going to go over the terms and definitions. Just want to put this here for you guys to pause, come to maybe later on after you read the video, just to get these down in your own notebook or things like that. But we're actually going to talk about these in the actual presentation, so we're not going to go over these right now. So, reading price quotes. In Forex, currencies are always quoted in pairs, right? So, Euro USD, GPD, USD, USD CAD, GJ, GU, things like that. So the price quote is stating that 1 euro is worth 1.1156 in US currency, right? So the first currency listed is going to be your base currency. The second currency is going to be your quote currency. The price listed is the exchange rate of the two, right? So this is going to be your base currency. This is going to be US dollar is going to be your quote currency. This is telling you that to get 1 euro is going to take 1.1156 in US currency. So currency pairs are quoted with two prices, the bid price and the ask price. The bid price is the price at which you can sell one currency pair at, and the ask price is the price at which you can buy that currency pair at, right? The spread is going to be the price difference between the two, and I'll actually have a screenshot of what that actually looks like on your trading platform. So the base currency is the euro, right? Quote currency is going to be the US dollar. The spread between these two is going to be the spread, the pip difference, right? We see this is 1.1156, and this is actually 1.1158 on the other end, which is going to be your ask price, which tells you what is the price you can actually buy this at. And this is going to tell you what you can actually sell this at, right? And this is what this will look like on your MetaTrader 4 platform, right? So you have the bid prices here, the ask prices here, and the difference between these two numbers is going to be your spread. So measuring the difference in exchange rate. In Forex, the unit of measurement to reflect the change in value between these two currencies is called a pip, percentage and point, right? So if Euro USD moves from 1.1156 to 1.1157, prices actually just moved up 1 pip, right? Most of these pairs in foreign exchange go out about 4 decimal places in relevance to where the pip is located, but there are some exceptions like the Japanese yen pairs, which go out about 2 decimal places, or your commodities like oil, gold, silver, or indices like SPX500, US 30, Nas100, and we'll go over a few of those later on in this presentation. So many brokers and institutions will print price as 1.1156.3, and this is because there's a smaller unit of measurement outside the pip, right? So there's actually another unit of measurement that equals up to a pip. This unit of measurement is a pipette. So a pipette is a fractional unit of measurement and is 1/10 the price of a pip. So it takes 10 pips to make a pip. So if Euro USD is 1.11563, the 3 is going to represent the pipette in this currency pair exchange rate price. So, example, if Euro USD moves from 1.11563 to 1.11564, prices now just moved up 1 pipette. On trading platforms, the digit represent 1/10 of a pip. It usually appears to the right of the two larger digits. So, you'll typically see on MetaTrader 4, if you have it in the advanced view, the pipette will actually be in the corner, like up higher, be a smaller number up higher. It kind of looks like an exponent to that number. Which is kind of funny. So calculating pips, the number, let's just take Euro USD for example. The 1 is going to represent 10,000 pips, the decimal point, and then to the left or right of the decimal point, the one after that is going to represent 1,000 pips, 100 pips, 50 pips, 5 pips, and then your pips. So example, if price moves from 1.11563 to 1.11663, prices now just moved up 10 pips. Now, this will take some time to get some understanding fully, but the pip counts actually go from 0 to 9. So once price exceeds 9, it just restarts back at 0 and moves the number to the right of it, left of it, up, right? So moves up in 1 point and pip count starts back over at 0. So the price moves from 1.11563 to 1.11613. Price is now just moved up 5 pips. So now we're going to calculate these pips on gold. So gold, like I said, or as is read in the Forex market, Xauusd, gold is a commodity, so the exchange rate is read a little bit differently. So, for example, when the price of gold changed from 1951.70 to 1951.71, this is going to be represented by a 1 pip move. However, if price was to move from 1951.0 to 1952.00, this is actually going to be a 100 pip move, right? All right, so now we're going to calculate the pip counts when it comes to the big dogs. So indices are represented a little bit differently. They truly move off of points and not pips, and 1 point is equal to 10 pips. So when it comes to US 30, when price moves from 32000.0 to 32100.0, this is actually a 100-point move, which represents 1,000 pips. If price was to move from 32000.0 to 32050.0, this move is actually 50 points or a 500 pip move. If price was to move from 32000.0 to 32001.0, this move represents a 1 point move or 10 pips. Now, on to Nas100. Nas100 also operates mainly in points. When it comes to Nas100, when price moves from 11900.0 to 12000.0, price is now moved up 100 points or 1,000 pips. When price moves from 11900.0 to 11910.0, price is now moved 10 points or 100 pips. If price moves from 11900.0 to 11901.0, price is now moved 1 point or 10 pips. SPX500, like everything else on these indice pairs, it operates in points. So if price was to move from 3900.0 to 3950.0, price is now moved up 50 points or 500 pips. If price was to go from 3900.0 to 3905.0, price is now moved up 5 points or 50 pips. So how do we actually make money reading these price quotes or trading these price quotes? Is this our lot sizes, right? So a combination of the lot sizes and amount of pips is how we are making money, because the lot sizes represents how much money per pip we're actually going to collect from a trade, right? And these lot sizes come in 3 different categories: micro, mini, and standard, right? So remember, your lot size is the money per pip. So micros, minis, and standards, right? So micro is going to represent 10, 20, 30 cents per pip, right? So 0.01 is going to be 10 cents per pip. 0.05 is 50 cents per pip. And 0.09 is going to represent 90 cents per pip. Minis represent dollars per pip, right? So 0.10 is going to be $1 per pip. A 0.50 is going to be $5 per pip. And a 0.90 is going to be, of course, $9 per pip. Now your standards represents $10 per pip, right? So a 1.00 is going to be $10 per pip. A 5.00 is going to be $50 per pip. And a 9.00 is going to be $90 per pip. Now, with these pip movements, we are able to see the difference in calculating the pips, right? So let's just take a 0.01, for example, moving at 20 pips is $2, 40 pips, $4, 60 pips is $6, right? Take this same amount of pips, but now we're changing from a micro lot to a mini lot size, which is going to be a $1 per pip. That 20 pips now equals $20. That 40 pips now equals $40. And that 60 pip now equals $60. Now let's move that up, bump that up once again to a standard on that 1.00. Now that $20 per pip now represents $200. 40 pips represents $400, and 60 pips now represents $600. Now these are the same amount of pips, right? But you see, totally different class of money, right? So now we're going to hop into that example I told you guys to wait for on the easiest way to calculate your pips when it comes to trading in the Forex market, right? So if you go to TradingView, which is the main site that I use for my trade and a lot of traders use for breaking down and analyzing charts, you're going to see this little tool right over here, right? This little measurement tool. This is the best tool and probably your best friend when it comes to ever measuring what amount of pips is in between two zones, or how many pips you're trying to calculate, or how many pips you want to put for your stop loss, things like that, right? So you just click this tool, click where you want it, and as you see, you're able to drag this tool and it tells you exactly how many pips, right? So this first number is not what you're looking at. You're looking at this second number, right? The second number is telling you how many pips you're moving at. And we see from this zone to this zone is going to be 121.3 pips, right? Let's take a look at US30. Now, I especially love using these on, of course, every currency pair, but especially when it comes to the big dogs like US30, Nas100, where pip movements are just like crazy insane. This makes it a lot easier to calculate these pip movements, especially since you have to translate points to pips. So we see, boom, you click it where you want to first, click it again to stop that tool, and we see, okay, this pip, this, once again, it's going to be the point count. This is going to be our amount of pips. So we see this trade from this zone to this zone moved about 10,000 pips. And this is actually, between pals testifying. If you've seen the previous videos, that's when pals started talking, and that's what happens. The power of pal, right? So using this, we are using on GU, but SPF500, right? Same thing. Looking at this second number here, so 130 points or 1,300 pips, right? So that is going to conclude us for this video, and I'm going to see you guys in the next one. Peace.